What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is January 25th, 2021. I am also the Director of Research at LeDuc Trading. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. I know it's very late tonight for this video. I had a doctor's appointment I was at earlier and running around a little bit. I wanted to continue with the video tonight just for the sake of consistency. If you are the one person out there that is watching it tonight, I really appreciate you. Today we're going to be talking about the price action, the indices, the volatility. We're going to talk about some of the trades that I took. We're going to talk about the price action today, the craziness in GameStop. And last but not least, we will go over some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in. And we will start with our S&P 500. So today we came in and the market was showing some incredible strength today. And, we had a nice Monday morning gap up. We had all these high short interest names that were just absolutely flying. Everybody was going crazy. Everybody was adding risk. Everyone was getting long GameStop. And then all of a sudden we had, a pretty big dip throughout the day. Let me just pull up our hourly chart here, just so we can see, on a more granular level what happened today. Yes, this was Sunday night. We came into the morning pretty much riding high. And then you can see here, 7 in the morning. Then we sort of just started falling off. Then we had a dip. And you can see here, this was at the 11 o'clock candle. You can see we dipped entirely through the entire weekly value area. And it was like, oh my gosh, we're about to fall into the abyss. And then dip buyers came in and auctioned us right back to pretty much the highs. And then you can see right now we are wrestling with that point of control right at around 38.40 on the S&P 500. So we ended up closing with the S&P 500 up 0.39%. We had the NASDAQ QQQ up 0.83%. We had the IWM small caps down just 0.1%. And then we had also the Dow Jones down 0.1%. So not really much of a change, when you look at things from a high level. Excuse me, I have something in my throat. So not really much of a change when we look at this from a high level. One thing I've been noticing is people are getting super concerned about what's going on in the markets. I'm seeing on Twitter everywhere, people are getting really cautious, like, oh, the market's too high. We're going to have a big correction, all this stuff. My philosophy pretty much is I'm certainly guilty at times of trying to front run corrections. I think everybody does it from time to time. But for the most part, as somebody that is a trend follower, I'm more so like a price action trader. For me, we are riding a really nice bullish trend here. And it's sort of my job to keep riding the trend until I get bucked off the horse. And what I mean by that is, as a trend trader, I am supposed to take a drawdown when the market turns. And I don't think many people talk about this. I think a lot of people are very afraid of drawdowns, and that causes them to, oh my gosh, the market's up too much, I got to pull out. And then they just sell all their holdings. And it seems like that's the prudent thing to do. Hey, I'm just managing my risk. And I think that's sort of one paradigm. You certainly don't want to be that trader that just doesn't manage their risk at all. Goes YOLO on calls and just messes themselves up, blows up. So I think that's one paradigm where you're just going crazy and you have no idea what you're doing. Then I think when you move along to another paradigm, you're very concerned about risk management. And you're sort of worrying about what could go wrong, that sort of thing. And for that reason, you might just preemptively like take all your chips off. For me, I think as like a systems trader, it's like, if the market is grinding higher, I want to be in it. I should be in it. Like, why would I not participate in the upside of the market? And sure enough, like if we break below this 20-day simple moving average, something like that, that's when I'll pare my risk down or even like go net short. Like I have the ability to go net short as well. I've done it plenty of times. But that's really only if the market's in a downtrend. So the way I think about it, it's sort of like king of the court basketball, where you play until you lose. And that's sort of like how I want to approach this market when it's being a little bit crazy. For the most part, I'm going to play until I lose. Like, I'm going to make sure to manage my risk. But even when we do get, the next big 10% correction, I should take a drawdown. If I can draw down like very small, that's the ideal situation. But I think a lot of people, like, they worry about a drawdown and it causes them to miss out just on a lot of market movements. That's sort of like my little soapbox rant there. So that took a while. So yeah, the broad markets all look pretty similar. We do have some pretty big catalysts coming this week. We have, a bunch of earnings coming down the pipeline on Wednesday. Let me see, I'm looking at my little earnings cheat sheet. Yeah, tomorrow after the close, we have AMD, Microsoft, Starbucks. And then Wednesday after the close, we have Apple, Tesla, and Facebook. So depending on how those chips fall, that'll likely determine market direction. We'll have to see, as always, we have to see what the river brings. We also have the Fed meeting on Wednesday. So if Powell comes out and says, hey guys, time to start tightening monetary policy, that would be an issue. I really don't think, like, given how weak the economy is, I think these guys are like scared out of their minds because they know this is all a house of cards. And really the financial markets is like all they have going for them right now. So I think the stakes are so high that I don't really think they can afford to like rock the boat and cause like a 10 to 20% correction off of sounding hawkish. So, I mean, we'll have to see. I could be totally wrong on that. But yeah, we'll just have to see how the chips fall on Wednesday. Now, let's take a look at these sectors and style factors real quick. I know it's late, so I'm going to try to move a little faster. And so for our sectors and style factors, we have KWEB, the Chinese Technology Fund, up 2.99%. You can see that's moved to our top slot in terms of momentum. We had the solar stocks take a break today, down 1.74%. We had cannabis take a break as well. And you can see cannabis is actually moving lower in the momentum rankings, solar as well. And it looks like the ARQ fund moved into one of the top slots here, the autonomous tech and robotics. And then you can see, yeah, so a lot of those high momentum sectors took a little bit of a hit. You can see the areas that did really well were the defensive areas. We had utilities up 2.01%. We had consumer staples up 1%. And then biotech looked pretty good as well, up 3%. So a really nice performance out of biotech. And then these style factors kind of show the same exact picture where we have the cyclicals down 0.17%. The high beta, where is that? Yeah, getting completely clubbed. High beta was down 1.47% today. I was actually very confused throughout the day. I was like, why are all these high beta stocks just getting absolutely killed, even though we have vaccines coming out later in the year? That to me is like, are these vaccines going to be effective, or is the economy really going to come back? It definitely got me thinking a little bit. But we'll just have to see what the river brings as always. So we'll see. Yeah, high beta, really taking a hit. And it definitely shows, the market sentiment when, you have high div, low vol, having such a strong day, 1.04%. Basically means people are going for safety. And then min vol also was the other top performer, up 0.74%. So people definitely getting a little bit more defensive, heading into some of these weekly catalysts. Okay, so then for trades in the watch list, there's actually a bunch to discuss here. So Big C was the one that I loaded last week, and then on Friday I actually added to my position. And at the time it seemed kind of stupid because I added some calls, March 70 strike calls right here. And then I added more on the next day. And I added more on the next day, like right around here, like towards the, top of this candle. So I was like, oh man, plenty of these other names moved, really big. This one barely moved. But Big C actually moved through the entire monthly value area today and actually broke out above it. Didn't close exactly on the highs, but this is still, a pretty strong close. You can see in terms of where Big C has been, this really is just like a swing high. So I have to see if this thing can really get some traction and even make it up to this 98 level. That would be absolutely crazy. I did take a target in my ad today because when I added my position, my goal was really, I have my main position, then I doubled up, took some off, once I hit this value area high right here as like a target, and then leaving the rest on. So Big C, really nice performance. Super pumped about that. GoodRx was another one that I added to on Friday. And GoodRx had a really nice breakout. So I was stoked. And GoodRx, I pretty much did the same thing. Took a target on my ad and then left my main position on. So yeah, we'll see if we can get to the 58 level. But GoodRx is another one looking awesome. So we'll see. Dragonfly also just went bonkers. Look at Dragonfly. This is ridiculous. So Dragonfly, I added this one at less than $1 back here. And now it's, almost at $3. And the CEO is going to be doing some like investor update on January the 28th. So we'll see if we sort of get a run into that and then maybe it sells off. I don't know, but there's something different going on in this stock. And it's uplisting to the NASDAQ. So we'll have to see what happens with this one as well. But Dragonfly, also performing. First Solar is a name that I added today. And this one didn't really go my way. But that's all right. So I added some of this one via common shares. And really, I like this pattern that's developing in First Solar, where we sort of have like this range that we've been stuck in for quite some time, but we continue to make higher lows. So this one, I ended up buying it, as it was breaking out, like up here, like 110, and then ended up turning around. So I'll have to see how this one develops. If we get a really bearish close below the 20-day simple moving average, maybe I'll take off those common shares. So I'll have to see. What else? Nanox, I added a starter position there. Nanox, let's take a look. Nanox was another one that sort of like turned around on me. But Nanox is a name that I feel like at this point I just can't afford to not be in it. And when I say that, I'm not really saying it out of like, I guess it really is FOMO, but what I mean by that, like I can't afford to not be in it, is there are some trades where I just find the risk reward so compelling that it's like it's a risk that I can't not take. So like with Nanox, we're getting to the upper end of this post-IPO range. And there's going to be some key catalysts coming up in terms of like FDA approvals. And if we get those FDA approvals, Nanox should have a, pretty nice revenue pipeline coming in. So the last thing I want is to not be in Nanox because I'm waiting for like the perfect moment. And then all of a sudden it's like, oh my gosh, FDA approval. And Nanox goes to like $100 that same day. So Nanox is one I also added, towards the highs of the day. And it did turn around a bit on me. But yeah, Nanox is just riding that 5-day exponential moving average. So we'll see. I want to hold on to this one as long as I can. CCV. Shout out to Trev. I was talking to him earlier today. And this is a name that I wanted to get into around maybe like $18. And I sort of missed the entry here. There's one where, there's just so many bullish stocks. You can only take so many. And we were actually talking today about this company. I saw it was selling off in a major way. And I saw that dip buyers were coming in for this one. So I ended up buying it around like $22. And, ended up going up like ended up closing up about 11% today. So when I bought it, it was pretty much like unchanged for the day after having a pretty big dip. And then, ended up more dip buyers coming in. So we'll have to see what happens with this one. If they do announce that it is a merger with Lucid Motors, this is another one where it's like I can't afford to not be in it. There's just way too much upside. So yeah, CCIV was a really nice ad today. Worked right away. And what else do we have? Yeah, and that's about it for trades today. Now let's take a look at some options order flow. Then yeah, I think for the rest of this week, I'm just gonna be on my toes, watching the price action as always. But in terms of like my Twitter feed and just like out there online, I think people are kind of like losing their minds right now just because the market's going up. Like I really don't get it. Yeah, because the market has been going up when the economy was, in the doldrums, when we were on lockdown. Like this fast moving market is really like nothing new. So I just don't get why like suddenly like now it's gone too far. Like we all know it's gone too far. I just don't get it. Like the market could definitely pull back. It could definitely correct. Like the market always corrects. I don't know. But yes, I'll probably try to be on Twitter a little bit less over the next couple days. And then, okay, so our options order flow, we have a bunch of orders. Expedia was one that I actually added to today. Expedia, you can see these January 2022 call buyers coming in size. So, $3.6 million order, $3.9 million, $1.1 million. And I like the candle that Expedia ended up putting in today. So Expedia ended up closing down 0.39%. If you take a look at this candle, there's pretty much like a washout in the stock. And then dip buyers, came in to support it. So we'll see if Expedia can hold this range. But this is one where I'm just in it with leaps. So today I added some more of like I believe it was the July 140 strikes. Because I just do think that if these vaccines are effective, at some point during this year, these reopening trades are going to catch a bid again, as they always do. And, who knows, maybe this one will pay out. Yeah, Expedia looks really good. And we have some Disney call buyers coming in. I didn't even see this. It's at noon. Disney, what's going on there? I know Disney had a really nice run not too long ago. Oh, not DID. Okay, so yeah, Disney looking kind of similar, where had a really nice run and then it sort of trailed off and it's been pulling back. So this one, yeah, it doesn't really look like the best setup for me personally. I'm not really like a big Disney guy. Datadog, we see an order coming in for that stock. Datadog is one that also has been basing for quite some time. And yeah, Datadog actually looks pretty nice here. So it broke out of the monthly value area. And we'll have to see if we can, pass this resistance level. It might come down to the earnings report. Looks like according to my toss, earnings are on February 11th. So we'll have to see. It looks pretty nice. Oh yeah, then I had some Apple calls that I ended up closing today, sort of like a run into earnings play. I had the February Apple calls, closed those out. Had a pretty good exit on these. I closed it when Apple's up maybe like 3 or 3.5%, because I think, this is a pretty nice breakout in Apple. But I think like for heading into the earnings report, like, what happens if Apple reports and it's maybe not the best quarter? So I sort of took it off as like a run into earnings trade. And then who knows, maybe I'll play for earnings or, we'll see. But I definitely, was comfortable taking it off here. So we'll see about that one. And then, oh yeah, the last one, GameStop. So Trev wanted me to talk a little bit about GameStop today. And GameStop, in my opinion, is just a classic short squeeze where, GameStop has, pretty much been in the gutter in terms of its business, where, they're essentially like a brick and mortar video game retail store, but there is a nice like turnaround narrative in GameStop right now. So I think that is what's attracting people into the stock and really what caught people wrong-footed originally. So GameStop, you have to remember for context, this thing was such an amazing short for so long. And I think that's what a lot of people are sort of failing to discuss here, where so many people over the years have tried to buy the dip in Facebook, or like value investors trying to invest, I mean, not in Facebook, in GameStop, and they have all failed. Since COVID occurred, GameStop sort of hit its bottom, and it's been trending up slowly but surely for about the past, 6 to 9 months at this point. I remember seeing GameStop at about $10 and being like, oh my gosh, GameStop, is really elevated right now. And I remember seeing it at like 15 and being like, wow, it's really elevated. And at one point, I had some GameStop commons. I actually had some GameStop that I completely forgot about in my IRA. And I ended up closing it out today for like $97. I picked it up at like 15. And I thought that I was super late on that. I'm picking it up at $15 a share. So, yeah, essentially like this one sort of caught fire. And I think this was just like a real anomaly where you had a lot of players short the stock. The short float was crazy. I think what happened was like you had a parabolic move right here, which was like that move up to $30. So I could see a lot of players that, maybe were like stubborn shorts going, man, we just got a parabolic move in GameStop. It's so overvalued, I'm going to short it. Then they all start piling in, just shorting the stock. And then it just does another parabolic move up to like 70. And I'm sure, again, like a moth to a flame, more people came in to short it and whatever. And long story short, for whoever was short GameStop, there were probably some careers that were lost due to GameStop today, and some careers that were made as well. So, both sides of the coin. But one of my buddies works at a large bank, and he told me this was on Friday, where he told me some large clients were short GameStop. And so they must have been in a world of pain, and who knows, maybe they doubled down. Even me, I actually considered shorting GameStop today. And I just decided not to. Like, this stock's so in play, it's not really worth it. It would have been a good idea for today. But I was also thinking that on Friday as well. So, yeah, it's just one of those things where a multi-standard deviation move occurs. Everyone tries to go into short it, and then it makes it an even higher multi-standard deviation event. So that's sort of how I'm interpreting it. But yeah, just really nice move. Sort of like one of those like I don't want to say once in a lifetime things, but you just don't see it very often. So you just have to look at it in awe. And if you're able to capture some of it, you just have to enjoy the ride and just try not to get too greedy. With that being said, I'm going to leave it off there. It's already pretty late. Thank you so much for tuning into the video tonight. I will see you all tomorrow.